gentlemen, welcome to another episode of Market Bus. We are about 2.5 minutes away from the market close today. Hopefully, your trades are ready to go and we're ready to deploy. Today, we're going to be paying attention to Marathon Digital, or as we colloquially know it, Mara. The earnings are expected to come in 5 minutes after earnings. Here we have a little bit of a preview of what happened last time. We know that Bitcoin prices are plummeting at the moment. So currently, we know that the stock is down, down, down. Hopefully, we see a bounce back right here. But I think the market is going to look past the earnings. So even if they're bad, we have to hear the important, three very important words in their earnings release. Hopefully, we hear that. We are waiting. Yeah, we are waiting to see the same words we saw on the Fluence earnings here. But yeah, welcome to another episode of Market Bus, everybody. Hope you're having a wonderful day. I need to make sure going live. It's a great day to be an investor. Hopefully it continues as time goes by. Look at the channel real quick. Let's go here. All day. Let's say hello to the chat. All right, let's go. Thank you, everybody. Hi, chaps. Antonio Campos ready to go. It's gonna be fun, guys. It's gonna be
We are
fun.
shortly
The
expecting
crew's in the
comments from
house.
Trump. Again, the live video is on the feed.
Ooh, Trump's gonna be speaking. By the way, can you guys hear that? Trump's gonna be speaking into the close. No way. Okay, so it's just Indiana. Okay, so it's the Indiana people at the White House. Okay. Well, yeah, let's get this. Let's get this show on the road. Man, it's exciting times. Do we have Bob? No, we don't have Baba today. Any other earnings? I mean, hymns. They tend to move a lot during earnings. I know that for a fact. But I don't know fully what they do. I know they sell stuff, but not fully in the loop here. He's got to be speaking, but I think this is just like a sports event thing. So I'm not too worried about that. And market close. And the market closes. It's a good day to be an investor. Semiconductors in the highs. We've saw a rebalancing energy finding a bit today as the Iran conflict continues to come into a halt. But AI and CapEx spending continues to boom. We are seeing Caterpillar, GEV, all of those names, Vertev too, continue to find a bid. We're seeing semiconductor and memory stocks finding a bid here. And yeah, energy was the big story today too. But yeah, now we are waiting for those Mara earnings, which they are all over the place. I'm kind of surprised. I was trying to get an idea of what the expectations are, and they're just all over the place. It's like earnings per share is expected $1 and negative $1.51 with 181 in revenue. But then if we look over here, it's a whole different story as well. It's like the revenue is the same, but then the earnings per share is expected to come different. We also know that Bitcoin has been rallying, so we know that their holdings are likely to increase in value, and they're likely to put that in the earnings, hopefully, and they're expected to make more money because they're going to continue to be farming.
Alphabet shares are closed down 3% in their biggest drop since March.
I did. I bought at the market open today, and we did find some interesting positioning here, which was exciting. Right. Let me have a look here. Let me hide that real quick. Let's go to the minute so we can keep a close eye on the after hours. But yeah, I mean, I bought around here. I was surprised that the stock was down when Bitcoin was up, and then all of a sudden we sort of kept going higher and higher and selling off into the close. Nothing to worry about. But again, it's got to be the narrative. Oh yeah, oh yeah. Micron had a really good day. I think the highs of the day were over 700 for sure, and then. Ooh. But yeah, if we go to the day, even Nvidia had found a vid today. Like it touched 220, which gives me a lot of hope. Keeping a close eye. The guy in my ear ain't gonna tell us. We're gonna have to figure this out. And last time I tried to do this, I failed at figuring that out. So again, data's all over the place. We'll have to see. We'll make the most of it. Yeah, it's just all over the place. Say like saying a negative $1.50, but then there had to be sort of like changes based on the price of Bitcoin kind of coming up, right? Because like Bitcoin is sitting at 81K today, going to 82K today. So we are finding that their balance sheet is going to look quite robust here. Ooh, there's bullish activity. It's 4.21%. So the question is how much more would it be? Correct. Yeah, Microsoft is finding it hard. Definitely finding it hard. But it's a good day. Hopefully, it's a good day to be a Mara investor. That's for sure. You're gonna see the moves as the numbers come out, and hopefully we can get quickly. Yeah, there's been a couple of news, but nothing major. I mean, like other than the deal with what's it called, Ridge Energy LLC. So they bought an energy company, and they're hoping to I think they're hoping to put more debt on the company. So we'll have to see how that pans out. Hopefully, they don't dilute. They've diluted investors enough, and that's why we continue to get hurt on the stock. But I'm excited. I'm excited. You know, all it takes is for the right combination of words to be said. Are you out of Micron? You can't be out of Micron. You sell some of it. You can't be fully out of Micron. You know what I mean? It's insanity. It's been crazy to say the least. And the problem is the stock's still fairly valued, like undervalued too. Even though we've had a massive rally still, it does feel that. Man, I've been selling and I've just been making them. Whatever I sell, I make money back. It's doing good.
So,
It's
following the
doing good.
close
It
of
is
US
beat
cash
up
equities
though.
markets, looking to the market wrap for today's session then. A renewed rise in oil prices pushed bond yields higher after the US and Iran failed to reach an agreement to end the war, undermining hopes for a reopening of the Strait of Hormuz and reigniting inflation concerns. US crude settled near $98 a barrel as traffic through the key shipping route remained heavily disrupted, reviving fears of broader energy shortages. Treasury yields climbed as markets continued scaling back expectations for Federal Reserve cuts this year amid the ongoing Middle East conflict. Despite the pressure from rising yields, a rally in semiconductor stocks lifted the S&P 500 to another record close, even though most of the index's components declined. Attention remained firmly on geopolitical developments. Reports indicated that Trump met with his national security team to discuss next steps in the conflict, including the possibility of renewed military action as negotiations with Tehran remained deadlocked. The ceasefire between the US and Iran appeared increasingly fragile after Trump described the agreement being on massive life support and criticized Iran's response to the latest proposal. The conflict is also expected to feature prominently in discussions between Trump and Chinese President Xi later this week, particularly around
Yeah, this
Iran's
week's
oil
gonna be
revenues and
fire.
potential
Holy.
weapons exports. Investors are also preparing for another key inflation report, with economists expecting the US CPI to post another strong monthly increase following March's sharp acceleration.
I think we got the results. Let's have a look. I think they just announced the results. Let's have a look. Come on. All right. I think the results are out. Let's have a look at how the stock's moving. So far, it's pretty much flat. I wouldn't want it to be just flat, but I wouldn't be upset either. Let's have a look. Let's see if we can get him here. We're all over. So what are they? First quarter results ending in Am I tripping?
U.S. Energy
Or,
Department says companies borrow 53.33 million barrels of crude
where
oil
are
from
they?
the SPR out of 92.5 million barrels offered.
I swear. But it's not bad. I mean, it's not moving either. Oh, look. They're not here, right? They're telling me Mara Holdings announces shareholder letter on the company website. They're gonna miss. I'm not worried about that. Like this quarter should be okay, but the market doesn't seem to know the results. I guess. Let me have a look. Where are you seeing the results? All right, there we go. Where? Am I? Okay, there we go. All right, let's have a look. So 174 million in Q1. We were expecting 185 million. Right. This helps. And then Bitcoin holdings decreased. And a net loss. Which we knew was going to happen. But how much did they miss by Antonio? I wish it was a little bit more snappy. What's the stock doing? The stock's not doing much after hours. So we're likely not to move here, maybe? Well, I managed to open it. Let's have a look here. Where's the link? Where did you send it? On here?
So, Wall Street Journal, citing sources, says the UAE has carried out military strikes on Iran. The UAE strikes have included an attack on a refinery on Iran's Lavan Island, and the UAE hasn't publicly acknowledged the strikes on Iran, according to the Wall Street Journal. Seeing some strength in WTI crude here, weakness in the S&P 500 futures, as again, Wall Street Journal reports that the UAE has struck an energy facility in Iran.
Ooh, it's no good. That's the problem. You're paying attention. Okay, so EPS. So okay, earnings per share missed by $3.31, and expected was $1.69, and they missed on. They also missed on revenue by almost 100 million. Nothing to worry about as long as they say the right things in the call. Maybe stock doesn't seem to care right now, but it's coming lower as the news starting to come out. Okay, so yeah, they missed. That sucks. That's expected. Now the big question here is data centers. Let's have a look. Hyper. Hmm. So we're advancing permitting site preparations in our portfolio and are engaged in active discussions with multiple potential tenants, including major hyperscalers. So it
So
might
the
be
Wall Street
next
Journal
quarter.
report that the UAE secretly struck Iran in early April.
Oh wow! So the UAE got upset here. I wonder how the. Let's have a look at the after hours market. I'm surprised that it's not a bigger move here. Look at my portfolio. That's the reason we sold off into the close. I wonder. This was such a complicated way to post this. That's the problem tomorrow. Things so far. Start with joint venture. This is a big one. I
We've
wonder
posted
why
the
they
article by the
missed.
Wall Street Journal on the feed for those interested.
Stock's coming down. Yeah, there we go. So it'll be interesting to see. This might be a, like later on. Like this might be a story for later. That's for sure. Yeah, we don't get paid this time around. I mean, the move is not crazy, right? Again, we're hoping, based on what they said, that they. Oof. Yeah. It took a while. That took a while for the market to realize what the data was. That was super complicated the way that it was. Yep. It's coming down. Oh, should have sold half my position. That would have been a risk-free trade. Oh, that's why not everything is sunshine and rainbows. But again, right? Like if they had done what Fluence had done, which is like, hey, we already have a deal with the hyperscalers. We're just making sure that this gets done. Bam. But they don't have a deal. So this is going to be interesting to see. The price per Bitcoin is starting to go up again. Not good. They mined quite a bit, and they didn't purchase, which is good. I hope the. I wonder if they sold. I wonder how many Bitcoins they have right now. They did sell some Bitcoin in order to start the migration here, which was one of the bullish things that they did. Whoa. Did you buy? That's to happen. I was hopeful. I was hopeful they were gonna have a deal. Hmm. I wonder. They don't say why, have they?
So the live video of Trump speaking at the White House has now started. We've got the video on the feed for those interested.
I'm surprised the market is not moving more.
Fantastic. JD, stand up for a second, will you? And his sons, Ewan and Vivek, as well as Secretary of the Interior, Doug Burgum. Doug, great secretary. We're doing now the reflective pond, and we saved about $600 million or something. It's going to be beautiful. It'll open about 2 weeks, and it's going to be incredible. They've been trying to get it open for years. They had no idea what they were doing, but we know how to do it, Doug. And it took us 2 weeks versus the projected 4 years. People would not understand it, but you're doing a fantastic job. Secretary of Agriculture, Brooke Rollins. Brooke, thank you.
I don't think he's gonna say much on that call. Oh no. Correct. But he started it to end it. You know what I mean? So that's a big one for sure. Oh man. It's so sad. So sad. We'll have to pay attention to see. Maybe they throw in a name, but unlikely. I mean, like the thing was, like we weren't. I wasn't expecting. Like I was hoping for a deal, but I wasn't expecting a deal. You know, same. The funny thing was the same for Fluence, because I wasn't expecting a deal, but we ended up getting a deal. You know.
Trump says we need more tariffs.
So the loss is just because they they priced their Bitcoin correctly. Yeah, here. They're doing the right things. But again, ooh, stock's not gonna like this unless they're able to like fix it somehow in the call. But we're still like what 20 minutes, like 30, what 40 minutes away. Oh, yeah. A little bit back to reality. And then tomorrow we have CPI data, which is gonna drive the markets. Expectations are all over the place. Market did sell off at the close, which gives you an idea of what the expectations are here. You know? I wonder if we could gap up today, but it would have to be done in the call here. But yeah, the numbers are not appealing at all. Again, this is in theory. I'll play for the end of the year. Similar to Fluence. The only difference is look at how Fluent has done compared to Mara and then in the near future, right? Even like Hot and the other miners have done really well too. That's the problem. Like if you go to year to date, like Riot and Hot have done better. CPI is gonna be dangerous indeed. By the way, if you're enjoying the content, don't forget to hit that like and subscribe. All right. Well, we'll have to see what it does during the call, right? Like they have to say the right things, which is like AI, hyperscalers, data centers, and then hopefully, we can get a bounce here. Because I'm surprised. What was the one? Hot 88, I think was. So Hot 8 was the name. There you go. X already in there. See? Hot 8 did very, very well. Like, and I think this was after their earnings. Like, they just, like, launched 33%. And that did help a little bit tomorrow. Right? So I wonder if they can pull something similar there. They also have a pretty sizable chunk of Bitcoin. The big question here, right? So it's like if you guys read here, we funded our portion of this debt reduction by monetizing our Bitcoin. It's like, why didn't you monetize it when it's 100K?
Like AI, generative AI, generative AI, generative AI, AI as AI, 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 AI. It uses AI to bring AI, 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 AI.
Way down we go. It's not that bad. Compared to where Mara has moved in the past, it's not that bad. So we gave away what? The gains that we got today from the Euphoria? Not bad. Like Mara likes to move a little bit more, 5-6%. So we'll have to see what the gold does. But look, I think the last earnings they were good. Like we did see pretty sizable moves. It likes to go. Let's have a look. Actually, whoa, this is why it's not going up. Expansion into our different one time. Mentioned in the whole call. Insanity. Let's have a look. AI. One, two, three. So there's 24 mentions of AI. Rookie numbers. This is why. This is why the stock down. I don't think so. I don't think so. I think investors were waiting for this, right? Like we are expecting the stock to be beat up, right? Rodrigo, I'm not sure. I don't think so. I mean, I could be wrong. Definitely could be wrong here. But Mara likes to bounce after earnings. All right, a day plus is it's always like almost bounced a little bit. Well, I could be wrong. I could be wrong. It depends on the call and what they're able to pull from here. %100%. But the thing was, the market was expecting them to miss. Not by this much, but they were expecting them to miss. Right? Like we know for a fact that they're having issues here, right? So, yeah, negative $1.31. But then I wonder, because let me have a look at the price of Bitcoin. Something actually. Let's have a look at the price of Bitcoin. Look at the price of Bitcoin until the 31st of March. Because you see, like, from like 26, so from January all the way to March, it was expected. So we have bounced a little bit from it. The question is do we continue to bounce? I mean, we're already April and May, right? Because I believe this earnings are first quarter is going to be until the 31st of March, right? Yeah, there we go. As of 31st of March, 26. There we go. So yeah, this is based on March. I don't think the stock goes down a lot here. I mean, this is sort of expected, but we'll see if they can come back. I mean, all it takes is hype. Let's see how many times they say hyperscalers. Hyperscaler. There we go. So hyperscalers was mentioned 7 times. Mistake. That should be the focus. But they are like, we are a Bitcoin mining center. I'm tired, dude. I'm tired. I've been working all day. This guy. I'm tired, dude. Serious matter. I don't work for you. Oh, man. But yeah, hyperscalers mentioned 7 times in here. Yeah, like that's the thing, right? Like it matters what they say, who they're talking to. If they even give you a hint of who they're talking to, that would be important here for sure. But then again, it's late here. Oh man. Yeah, let's have a look. So you see, it's like the hyperscalers rhetoric, they're gonna have to focus on it during the call. Now, if he's well trained, which I hope he is, dang. You know, like our strategic partners, bam bam. Like we're advancing permitting this. So we have that. This is good. Because this potentially set us up for the next one. Let's go. Fire. Gut. You know? What did I do? I've been buying. I have calls at $8, $10, $12. What else? $8, $10 for January, which I'm hoping. So like I'm still like for me, if it doesn't give me the results right away, I'm not too worried. Because the thing is just like I think the market was expecting this. And the fact that we're not moving that much on here, it doesn't have me worried. Correct. 100%. I think right now, no, you know what? Maybe not the war, dude. Like maybe not the war. I don't think the war right now is driving headlines too much because we know that Trump wants to get out. Now, if we start hitting oil infrastructure, that could panic the markets, but we already know what's going to get affected. One of the things that's kind of helping semiconductors here is that there is enough supply for the semiconductor market to take from America, at least in the helium production. Prices will go up, but it's only 1% of the total cost of semis here. So that's what I think. Like, I'm not too worried. So, yeah. And then I don't know. I don't know how it'll behave. I'm waiting for the call. We're still 30 minutes away. The Trump effect's always in play here. Trump's effect's gonna be in play for the whole year. Well, for the remainder of the 3 years, unless he gets impeached, right? There we go. There we go. There we go. I'm gonna get DMCA. So let's leave it at that for now. But we can wait for the call. I mean, they've lost a ton of money. It's because of their Bitcoin holdings too. No, I like Mara. I like Mara, and then I hold raw Bitcoin for my like crypto position, and then I'm evaluating. Well, I was evaluating, and then I didn't actually make it, which was like what's it called? Like cloud, a core weave or an area trade, getting in, playing the data centers. But then I'm also having data center exposure with the big hyperscalers, so it's the miracle. So yeah. Okay. Depends. Mara today is down. I can guarantee you that much. It's crazy because it's like it completely like shuts it off. But it's okay. Echo. Alarm at 9:55.
Is that at 9:55 morning or evening?
Evening.
Alarm set at 9:55 p.m.
Okay. So that's the thing. It's like right now, do I think that Mara can go up or down? Like, okay, yeah, okay. You can ask Dragos what he thinks about this. So I don't know. I like the stock. Okay. I like the stock. Do I think it can go up? Yes. Do I think it's going to go up in a straight line? No. Because the problem with Mara is they dilute a lot, and hopefully they're not diluting and they're paying off debt, which is fantastic. Right? And hopefully we see them sort of pick up as they start.
Iran's parliamentary speaker Ghalibaf says there's no alternative but to accept Iran's rights in the proposals. Says any other approach would be completely inconclusive.
Man, the Iranians are gonna make this so much more complicated. But yeah, so do I think that Mara, like I'm in the camp that Mara is gonna be up by the end of the year, higher from here for sure. I mean, if you look at the chart and you look at just the valuation of the company, I mean, right now they're burning money. The big question is can they make the transition fast enough, or maybe they just get bought out by someone? Because a couple of months ago they were worth like half of what they were worth today. right? So, well, not half, but 2/3 of what they were worth today, right? So it's like it's difficult to say. I mean, I
So
like
Iran's
the stock.
parliamentary speaker Galabath on X says there is no alternative but to accept the rights of the Iranian people laid out in the 14-point proposal.
Well, we are slowly heading up. Now, if we sort of like, because what is that? That's a 200-day moving average. We could retest it and go lower. And then the thing is we're still tied to the Bitcoin price here. We're still tied to we're still tied to Bitcoin. We're still tied to like the data centers, right? And then we have to compare because it's funny because the market compares them only with the miners, but the reality is like, yeah, their business right now is that. But then if you look, for example, if you take all of that away and you look, for example, like a coral weave on an iron, you do see sort of like we have not been following the data center place, and then we could migrate to that. But even if we go to like the last 5 years, for example, like let's say we go to the last 3 years, say we go what 3 years, right? It's like we've just seen companies like iron just pop like increase drastically. And I just want to make sure I'm right. Iron is a data center play, right? Because like they are a financing company, so and they've been buying data centers, so hopefully that I'm right there. But I know CoreWeave for sure is, and they've definitely had their rally at the start of 25. So could we see Mara go? I mean, they're in the middle of a transition and a turnaround, and if the price of Bitcoin continues to go up, we could see their earnings per share shoot drastically to the upside. But they are losing a ton of money. I think they're the second, like they're the second biggest holder by market cap. Let me have a look. By total Bitcoin. Yeah, strategy is number one, and then Mara's number two, and this has dropped to 35 million Bitcoins. Let's have a look here. They just said it here. We are expecting that too. That's the problem, right? So if you ask crypto people, they're saying that we should be getting a correction soon, and we should be coming down of the low, like lower than the 80s. So that's also a possibility. Now with Mara, I don't know. Like my position, I kind of love it. Like I have 15 people watching me speak about Mara, and it's like the only company that people will watch me, except for maybe Bitcoin. But yeah. Oh, it's there. Bitcoin holdings. Bitcoin holdings drastically down to 35K here. So, no bad. It's better than this, you know. Like that was the problem. They were bleeding money because it's just what was happening with Bitcoin and the amount of Bitcoin that they had in their balance sheet. Now, if they had sold it at 110K and reshuffled it into data centers back when they had it instead of borrowing money, would have been a lot better, in my opinion. But of course, it's hard to call what like it's hard to call the market, right? Like obviously now we know what would have been the best plan of action here. But yeah. Oh man, now we play the waiting game here. But yeah. Rest of the market, the question is, do you want to stay? Like it depends on the risk too. Because the thing is like the amount that I have in Mara is substantial, but ain't gonna bankrupt me, you know? So based on that, should be okay. Yeah, it's all on paper, but I think they changed the accounting rules and now they have to report them, the wins and the losses quarter on quarter, which kind of sucks. And maybe they had to sell too. So, okay, this is the reason I like Mara. Okay, can it be wrong? Sure. Does it meet your what's it called? Your what's it called? Your risk parameters? Maybe, maybe not. I'll tell you why I think Mara's worth it. Okay, the thing about Mara, which other hyperscalers do have, don't get me wrong, they're not the only one by any means, but the fact that they're sitting on this amount of power and this amount of data centers ready to deploy and just shift, whether it's either stay with Bitcoin or potentially just move to AI, right? Like we are seeing how much money the hyperscalers are willing to spend. It's a $5 billion company. This is a
So
buy,
Trump
like this is
has
an
ended his
acquisition
remarks
target
at the
just
White
because of
House
the
event,
contracts they have
and there
with
was no
energy
comments
already.
on the conflict or policy.
The thing is like I don't think that the earnings are gonna be good anytime soon. Like it's not. I'm not expecting them to be right. Like this is a turnaround story, and like we are making a massive change from a crypto miner. And the thing is I don't think they're gonna stop mining Bitcoin. We're gonna go from Bitcoin mining to AI data center, and we're hoping that the data center part can actually provide massive amounts of money, and then we can use this energy right here, which in America is about half, probably actually a bit more, because yeah, they do have like most of it is in the American in America. Where is the yeah? Like the amount of energy they have and the amount of access they have already, like it's just about a plug and play pretty much. So they already have are looking for the funding and they're already looking for the partners to just be able to sell the compute to. Now the big question is like, are the chips from Nvidia going to be worthwhile investing in? So yeah, the difference is I like the fact that they have this amount of energy just waiting. And they're super undervalued, like in my opinion. But again, if they continue to lose money at this rate, I don't think they'll continue to lose money though. Again, take everything as they say with a grain of salt. I'm not a I'm not a guru or anything. I have no idea. Like this is just it's a risk I'm willing to take here. But yeah, they have missed a ton. I think last earnings they actually did okay. They did better than expected last earnings and the earnings before, and that's why they found the. But yeah, even then they went down. No, 2 earnings ago. And then here they missed drastically, and here they missed drastically. Did I put my estimates on Mara? I don't think I did. Oh yeah, yeah. Correct. This is also very true. But again, I mean, Mara is not has not been the best. Like one thing I want to like I want to make it like make that clear, right? Like there are other companies that are producing. Well, I mean, look at HUD, right? Like if we go to like this was one thing that they did, right? So if you go to HUD 8, like look at the earnings they had. It was awful. They were so bad. Well, actually, you can't see it. So here, you can see it right here, right? So it's like HUD 8 had awful earnings, but because they said the right words, because they said the right words, like look at that, like it was an awful beat, right? Like not as bad, but it was bad, right? What do you mean your average? My entry price? It's all over the place. So, but look, I'll give you a hint. But my entry price on Mara right now, let's have a look. I have it on my. So my Mara entry was at $9.85, and I have call options to enter at 8, 10, 12, and 13. And the 13 I bought today for the end of the year. But again, this is a stock that I'm
So we've
willing to
seen quite
hold
a
for
few of these
until
reports
December.
come through on the wires today, but we're hearing now from the UK Deputy PM, Lammy, who's urging Starmer to set out a timeline to quit, according to ITV. So again, I think total earlier was upward of 57 MPs, which were urging Starmer to resign. But this is the Deputy PM now asking Starmer to resign.
Yeah. Dragus is around 19. That's also true. That's also very true. But yeah, Hot 8, again, all they did was like this. It was just like they just had a lease announcement. That's it. So all of a sudden, you get one of the hyperscalers saying, "Hey, we just like to increase our input. Let's just get a couple of leases with them." Bam. And if you're able to get your hands on Nvidia hardware, even more. No bad. No bad. It's quite a sizable position. Pretty good. You know, now the question is like, are you willing to hold it? Then it's okay. That Micron trade did treat us nice. I'm not gonna complain. Let's have a look. Call this here. You think Farage? No. Oh man. Like I think so too. The fact like there's also we also have to take into consideration that they did borrow a lot of money, right? The problem was they put it on like they kept buying Bitcoin instead. I would have just like kept the Bitcoin that was farming, and like I wouldn't have purchased more, or at least not so those at least not the high levels. But I mean like if you look at the market cap of Mara, right? Like if you look at the market capitalization here, it's a $5.9 billion just because of the amount of dilution that they've done throughout. The enterprise value is almost 8 billion. So that tells you that they have in debt around $3 billion worth of debt, and they're losing a ton of money throughout the last 12 months. It's 1.31 billion dollars. But they also have decent sales here, so hopefully they can pick up the sales, and then if they're able to get a data center lease, then that's free money that's coming in. You know, because the thing is like the thing I like about it is the fact that whenever you're not using the data center, you can mine, and then you can create some sort of like a crypto sort of like baseline on earnings, and then you can grow on that, right? But again, Mara is only Bitcoin. Oh, by the way, guys, we go live every Thursday. We talk about different companies and different things. Some of the biggest hits that we have are some of the biggest hits that we are Fluence and Mara, which have done very well in the last couple of weeks. Sorry, Fluence and Micron, which have done pretty well in the last couple of weeks. And some of the some of the stocks that we end up getting sort of attached to Mara, which is like lower today. But yeah, Fluence has done quite nicely today. And after the earnings, we didn't do the earnings slides for Fluence, did we, Dragons? But yeah, stock was nicely up. So much money. I think a third of the company has changed hands, so it's being kind of nuts. You know, I gotta say that. Yeah, this is good. Shout out. That's why you're a mod. That's why you're a mod. You know, and then yeah, I mean, it hasn't treated us bad. Today there was an opportunity to buy at 23. I missed it. I'm sad. Welcome you. And then yeah, it's been nuts. Like how long can it go for? The thing is like if you look at the forward PE, still not bad, right? I think historically this company is sitting at a forward PE of 9, and now we're actually making like implementing things. And I don't even know why First Solar. I haven't done the research on First Solar today, but it did pump today. Like it had a massive pump today. I don't know why, but yeah. First Solar finally finding a floor, and I'm hoping that it continues. I mean, maybe retest here, like the 220s, and then bounce up, and then continue to go higher here. That'd be nice. But yeah, I like First Solar. I don't know. I'm AI centric right now. I like anything AI, and I think that at some point or another, the Mara trade, if all of the data center stories are true, and then we are actually constrained on compute, there will be an opportunity to lease this data centers in order to get this done. You know, that's why I like the company. You know, like, but again, it's like it could take so long because the thing is like even Fluence was the same. What do you mean? So which one? Because they have the cooperation, but it's like what they're just securing energy. It was. It did really well. Like since the earnings, they've done really well. I think they missed here in the market. Like the market kind of freaked out, but then anything energy is starting to pick up again. The one I'm surprised about and that has been lagging is been catching up to price, which I'm very interested in, is GEV. We are finding some sort of footing here before we continue to go higher, but GEV is doing very well. Again, how long this could last, I'm not sure. But I think energy is the next part, right? Because we're seeing memory go up like crazy, and then we're gonna see the margins in energy producers continue to just explode. Echo, stop. Dude, it's making so much money. When did I buy Micron? I called Micron out. And I look, yo, by quick question, Ace and Gorilla and Rodrigo and all of you guys. Where do you guys find me? Are you guys finding me from YouTube or from eToro? I wonder. Um, well, we've had semis already too. Like I'm actually betting on this guy. I'm actually betting on I'm actually betting that Nvidia is going to find a footing again before the earnings, as most of the semiconductor catalysts have gone through, and then hopefully we continue to see the rally in semis because they're going to continue to have pricing power. But then we're going to see it in the rest of the stack, and that's going to be electricity, because I think that that's one of the next bottlenecks, right? And understanding the dynamics of electricity. No, nice, sick, nice. I'm surprised. Last time it happened the same. Like I literally just put Mara and it was like me. So it's like sometimes it's like the small companies that end up doing good. Yeah, Graham, I know. You found me on YouTube? Really? Really? That's insanity. But yeah, every Thursday we go live. I go with a couple of popular investors from eToro too. A couple of friends. We have some good calls. I'm not gonna lie. We have some good calls. Like Dimitri has made me money, and Timothy has made me money, and Mimi has made me money. They have all made me money, so I can't complain. All right. AI, AI, AI. There's no way. You didn't find me on eToro? Really? It's crazy. Yeah, the Mara earnings, man. This company, people are so interested in it, but it's like we've been holding the bag for so long. Like I remember, like my best stream was on Mara earnings. I had over 200 people watching, and everybody's super excited. The fact that there's not this many people watching tells me that we're not in an euphoria phase. So there's still time to make money here. What? No, Dragos, you found me on the Mara earnings last time, no? %, you found me on the Mara earnings. But yeah, this I agree for now. Semis are going to continue, and we might see a little bit of pullback. But I mean, like what I've seen, I don't know, like what I've seen in micro has been nothing other than as historic. You know, so. Yeah. Well, it's finding a footing again, right? Like if we go to, like even Exum found a footing today, and the thing is we just don't know how long this is gonna last. Oh yeah. Yeah, it's been more than a year for sure. Which I'm quite surprised. It's about a year. Actually, it's about a year. I started doing this about like a year ago. We hit 600 subscribers, which I'm super excited about. And Rodrigo, thank goodness you didn't forget my first Mara earnings all over the place. This time around, it's a little bit more put together. But again, this company is nothing but all over the place. I wish it wasn't. Let's have a look.
Voice news disconnected.
Oh, this is copyrighted music. I'm gonna get struck it down. Wait. Let's just wait a second. They're late. Mm-mm-mm.
Greetings and welcome to the Mara first quarter
Tell me how the
2026
audio
earnings
is.
conference call. At this time, all participants are in a listen-only mode. A question and answer session will follow a formal presentation. If anyone should require operator assistance, please press *0 on your telephone keypad. As a reminder, this conference is being recorded. It is now my pleasure to introduce Robert Samuels, Vice President of Investor Relations. Thank you. You may begin.
Thank you, operator. Good afternoon, everyone, and welcome to Mara's first quarter fiscal year 2026 earnings call. Thanks for joining us today. With me on today's call are our Chairman and Chief Executive Officer, Fred Thiel, and our Chief Financial Officer, Salman Khan. Today's call includes forward-looking statements, including those about our growth plans, liquidity, and financial performance. These involve risks and uncertainties, and actual results may differ materially. We disclaim any obligation to update these statements except as required by law. For more details, see the Risk Factors section of our latest 10-K and other SEC filings. We'll also reference non-GAAP financial measures like adjusted EBITDA, which we believe are important indicators of Mara's operating performance because they exclude certain items that we do not believe directly reflect our core operations. Please see our earnings release for reconciliations to the most comparable GAAP measures. We hope you've had the chance to read our shareholder letter and look forward to your feedback. We'll begin with some prepared remarks from Fred and Salman. After their comments, we will open the call to Q&A. I'm going to turn the call over to Fred to kick things off. Fred?
Good afternoon, everyone, and thank you for joining us. Q1 2026 was a redefining quarter for Mara, not an incremental one. This was a quarter where we executed deliberately across multiple fronts at once and moved the company decisively forward. During the quarter, we moved the Starwood joint venture from announcement to execution, closed our acquisition of a majority interest in Exaion, and retired about 30% of our outstanding convertible debt, all while realigning the organization to fit the business strategy. Shortly after quarter end, we announced a definitive agreement to acquire Long Ridge Energy and Power from FTAI Infrastructure. These were not isolated events. They are connected pieces of a strategy that is now fully in motion. That strategy starts with a single conviction. The next phase of digital infrastructure value creation will be shaped by the control of power, where it is located, when it's available, and how it can best be monetized. AI adoption is accelerating faster than power can be brought online to meet demand. That is not an opinion. It's the defining constraint of this market. Available, connected energy is the bottleneck on AI compute growth. The ability to source, control, and dynamically allocate that power is a structural advantage. And the lack of available power will negatively impact semiconductors related to AI if there's not sufficient capacity to absorb chip supply. Some semiconductor vendors are investing directly and locking up demand, as evidenced by NVIDIA's recent investments. MARA has positioned itself squarely in the bullseye, with already energized power to enable hyperscalers to, in the near term, energize compute. With our previously 1.9 gigawatts of power capacity and now with the addition of Long Ridge, we're having advanced conversations with multiple prospective tenants across multiple sites. Let me start with Long Ridge. We view Long Ridge as a land and power acquisition to develop a premier compute campus. It is a strategic enabler for our existing Hannibal operations, adding to the site 1,600 acres with a path to grow the existing 200 megawatts of power to over 1 gigawatt. It will establish a leading AI HPC data center campus in the PJM interconnection, one of the most active data center and power markets in North America. In a market where power and infrastructure constraints take years to solve, Long Ridge gives us exactly what is needed to deliver value to shareholders upon closing. This is not a greenfield site. It is a site that is already operational, already generating cash, and that gives us immediate access to the infrastructure, interconnection, physical footprint required to scale to over 1 gigawatt. The power is there, the land is there, the water is there, the fuel supply is there, and the interconnection is there. The centerpiece of the campus is an approximately 505 megawatt nameplate combined cycle gas turbine, one of the most efficient in the entire PJM interconnection. It generated $144 million of annualized adjusted EBITDA in the second half of 2025, with 76% contracted capacity. This is stable, visible cash flow from the moment we close the transaction. Beyond the power plant, the campus consists of over 1,600 contiguous acres and includes the 200 megawatts of MARA's existing capacity at Hannibal. As of signing, we have already submitted plans to augment the Hannibal interconnect, and we will move quickly post-close to further expand power capacity at the power plant. At close, we plan to retain Long Ridge's skilled team consisting of about 25 full-time employees that have deep operational knowledge of the facility. They will supplement our existing energy asset operating expertise. Here's what matters most about the scarcity of this asset. If you tried to build this from scratch today, the land, the power, the permitting, the water, the interconnection, you're looking at $2 to $3 billion of capital and 7 to 10 more years of development time. We're stepping into a platform that is already built, already operational, and already generating cash flow. Assets like this are very hard to come by. Some might even call it a unicorn. So when they do, you move. In total, Long Ridge gives us over 1 gigawatt of total potential capacity and a path to scale to 600 gross megawatts of AI and critical IT load over time. This transaction increases our owned and operating capacity by approximately 65%, taking us from about 1.3 gigawatts of energized capacity today to roughly 2.2 gigawatts by closing, and including expansion capacity to 2.4 gigawatts. We've been actively engaged with multiple top-tier potential tenants around this asset. These conversations are now accelerating since announcing this transaction, and the current plan calls for an initial 200 megawatts of AI build-out, with construction beginning around the first half of 2027 and initial capacity coming online in mid-2028. The power plant is not the end product, it's the enabler. It provides reliable control over an increasingly scarce input at a cost of approximately $15 per megawatt hour. This is a cost position that very few can match, as well as a positive cash flow tomorrow. And to be clear, our existing Bitcoin mining operations at Hannibal will continue without interruption until such time as the data center campus needs the power. MARA does not expect to reduce Long Ridge's current supply of power into the PJM grid. As we develop compute capacity behind the meter, we will pair that demand with incremental generation over time. Our goal is to continue to operate Long Ridge Energy and ensure that consumers continue to benefit from the reliable power they have been accustomed to. Taken together, Long Ridge gives MARA a scaled power advantage platform, immediate and durable cash flow, and a clear path to build one of the leading digital infrastructure campuses in this market. Next, I'd like to talk about our strategic partnership with Starwood, which has made meaningful progress during the quarter. We moved from announcement to execution, advancing permitting and site preparations across our portfolio, and entering active tenant discussions with multiple counterparties, including hyperscalers, across 90% of our existing owned and operated sites, including the Long Ridge campus. I want to take a moment to explain why the structure of this partnership matters, because it's fundamentally different from a traditional lease, and that distinction has real economic benefits for MARA and its shareholders. First, Starwood is a trusted institutional counterparty with global investment expertise and a dedicated data center development platform. Their team has developed, built, and put into operations more than 7 gigawatts of data center capacity worldwide for premier tenants. This means Starwood is a trusted counterparty, having negotiated multiple leases with premier tenants, which we believe accelerates the timeline for site evaluation and lease signing, something we have already seen. Second, Starwood brings captive development and EPC capabilities. They lead design, development, construction, and facility operations, giving MARA an experienced execution partner without having to source and manage third-party contractors. Additionally, their prior experience for constructing sites for premier tenants provides an enhanced certainty regarding their ability to develop on-tenant timelines and technical requirements. This trust factor provides prospective tenants more confidence that their timelines and specifications will be met. Our peers who have never done this before still need to build trust with prospective tenants because they lack a proven track record. Third, the structure is capital efficient. When MARA contributes to sites, its value is determined using pre-agreed site-specific economics tied to power, land, interconnection, and development attributes. That value gives MARA equity credit in the project before joint venture cash contributions are required. To put this in context, on an illustrative 200 megawatt project, MARA could generate approximately $50 to $100 million of net annualized stabilized cash flow based on a 9% to 15% yield on cost range, with little to no incremental equity required beyond the value of the site we contribute. As projects scale, the structure naturally evolves. MARA's site contribution is fixed, so for larger developments, the incremental growth capital becomes more proportionate between the partners. At that point, the funding model starts to look more like a traditional data center development structure, including the use of construction financing that can support roughly 80% loan to value. The key point is that this model allows MARA to monetize the value of its powered land portfolio, preserve significant upside in long-term cash flows, and manage capital exposure in a disciplined way. Most critically, this is not designed to be a one-time transaction. As we continue to aggregate land and power assets, our goal is to contribute sites into the structure repeatedly. Starwood is a capital-efficient engine for turning MARA's powered land portfolio into contracted, institutional-grade digital infrastructure at scale. We expect to sign multiple tenant leases by year-end. As the pipeline converts, we'll disclose contracted megawatts. While the Starwood joint venture addresses the large-scale hyperscale end of the AI infrastructure market, Exaion addresses a different but equally important segment: sovereign, enterprise, and private cloud AI compute. Together, they give MARA two distinct pathways into AI, both grounded in the same foundation of energy-backed infrastructure, both serving real and growing demand. Governments and enterprises, particularly across Europe and Canada, are increasingly unwilling to rely solely on hyperscale platforms for their AI infrastructure due to data sovereignty and cost. They want control over compute, data autonomy, jurisdictional compliance, security, and independence. This is not a niche requirement. It's AI policy. As AI policy evolves and data sovereignty standards tighten, a meaningful share of AI workloads will require infrastructure that is compliance ready, jurisdictionally controlled, and trusted. Exaion is built to serve exactly that demand. We continue to build on our proven success in UAE, Finland, and our recent launch in Oman. We are in active discussions with major energy companies in France, Brazil, and Saudi Arabia across energy-rich regions where reliable, scalable power supports long-term digital infrastructure development. We are still early, and we will share a more detailed roadmap as this effort develops. The simplest way to think about it is Starwood and Exaion are different expressions of the same thesis. The JV pursues large-scale co-location for hyperscalers. Exaion pursues private cloud, sovereign AI, and enterprise deployments in regulated markets, where these are critical criteria. Both depend on MARA's core capability of controlling the monetizing energy-backed infrastructure. Together, they expand our addressable market across two large and growing segments of the AI infrastructure opportunity. Finally, Bitcoin mining is the operational foundation we're building from. Our strategy is to co-locate new infrastructure with our existing mining operations. This allows us to monetize power assets immediately while building on the operational discipline and infrastructure expertise that mining demands. Mining generates revenue today. It preserves the option to redirect capacity toward AI and critical IT loads as those opportunities mature on the same sites. That flexibility is deliberate. It's not incidental to our strategy. It is central to it in that it allows us to best monetize our power and compute. We continue to believe Bitcoin is supported by institutional demand. In our view, that creates a constructive setup over time, with a bias to the upside of institutional buying continues and retail demand returns. We continue to believe Bitcoin will appreciate beyond its current levels. We also took deliberate steps to strengthen the balance sheet during the quarter. We retired about 30% of our outstanding convertible debt at a discount, reducing potential dilution and increasing our financial flexibility. This was a decision to reduce the capital structure's drag on equity value and give us greater capacity to pursue the highest return opportunities across the business with discipline and without being forced to dilute shareholders. With that, I will turn the call over to Salman to walk through the financial results.
Fucking finally, dude. They keep diluting people like crazy.
Thank you,
That's one of
Fred.
the biggest issues.
Good afternoon, everyone. Before I walk through the quarterly results, I want to briefly frame the first quarter of 2026 from a strategic and financial perspective. This was a quarter in which we strengthened the balance sheet, reduced potential dilution from convertible notes by as much as approximately 46 million shares or 9% on a fully diluted basis, and continued to align our capital allocation with the strategy. As Fred outlined, we are converting MARA's digital infrastructure with lower cost, large-scale energy capacity into AI and critical IT. Two initiatives are central to that strategy. First, our recent announcement to acquire Long Ridge adds one of the most efficient energy-backed compute campuses with existing cash flows, own generation, existing interconnection, low-cost vertically integrated power generation complex, and a significant development opportunity over time. This acquisition is next to our existing Bitcoin mining site and is expected to expand our AI expansion in an AI-rich corridor. As we pursue the regulatory approvals and seek consent from Long Ridge debt holders, we believe Long Ridge will provide near-term diversified financial performance while unlocking significant long-term contracted digital infrastructure revenue. Second, the Starwood joint venture gives us a capital-efficient path to monetize the value of our sites by converting them to AI, HPC, and critical IT workloads. It is important to note that in our JV structure and Starwood, our joint venture structure with Starwood, MARA contributes a site into the joint venture once a tenant is signed, for which we receive credit based on the site's power, land, interconnection, and development attributes at predetermined value, as Fred mentioned earlier. That is the power of the joint venture model. It allows us to convert the embedded value of our existing infrastructure into meaningful ownership in large-scale digital infrastructure opportunities, while significantly limiting the incremental capital required from our balance sheet, giving us a higher return on capital than our peers. Now let me turn to Bitcoin price in Q1. This was a challenging quarter for the Bitcoin price and reflected broader pressure across risk assets. The decline was driven by a combination of macro uncertainty, tighter risk appetite, and continued pressure on mining economics. For MARA, that backdrop reinforces the importance of operating discipline. We remained focused on fleet efficiency, cost control, and capital allocation rather than pursuing growth for growth's sake. Since quarter end, Bitcoin has rebounded meaningfully, increasing approximately 20% from its March 31st closing price. While volatility remains inherent to this asset class, the recovery reinforces the value of maintaining Bitcoin as both a reserve asset and a source of strategic financial flexibility.
And for Mara's nothing.
With that context, I'll turn to our Q1 financial performance, capital allocation, and balance sheet activity. Revenues in Q1 of 2026 were $174.6 million compared to $213.9 million in the prior year period. The decline was primarily driven by an 18% decrease in Bitcoin's average price, which reduced revenue by $33.1 million, and to a lower extent impacted lower production, which accounted for approximately $2.5 million. In addition, other revenues declined approximately $3.7 million, primarily reflecting lower revenue from other digital asset hosting services compared to the prior year period. During the quarter, we delivered record energized hash rate of 72.2 exahash per second, increasing 33% from 54.3 exahash per second in Q1 of 2025. This growth reflects continued fleet optimization and the deployment of approximately 2.4 exahash of new generation ASIC miners at favorable pricing during the quarter. Our share of available mining rewards reached 5.5%, up from 4.8% in Q4 of 2025. We mined 2,247 Bitcoin or 25 Bitcoin per day in the first quarter of 2026. That is approximately 39 fewer BTC than prior year period, reflecting a higher network difficulty level partially offset by our higher hash rate. We reported a net loss of $1.3 billion or $3.31 loss per diluted share this quarter, compared to net loss of $533.4 million or $1.55 loss per diluted share in the first quarter of 2025. Approximately $1 billion of this net loss for the first quarter of 2026 was driven by unrealized mark-to-market fair value adjustment for digital assets, a direct reflection of the drop in Bitcoin price during the quarter. A reminder that based on our current Bitcoin holdings, every $10,000 change in Bitcoin price results in an approximate $350 million impact on fair value of digital assets, which is an unrealized mark-to-market adjustment to our income statement. Adjusted EBITDA for the quarter was negative $1 billion compared to negative $483.6 million in the prior year period. Similar to net loss, this figure is dominated by the Bitcoin mark-to-market change. We use adjusted EBITDA as a supplemental measure of operational performance. A full reconciliation to net loss is included in our shareholder letter and earnings deck. On the cost side, our cost per kilowatt hour was $0.04 for our own sites in the first quarter of 2026. For context, we believe this remains among the most competitive in the sector at a larger scale. Our purchased energy cost per Bitcoin for the quarter for our own mining sites was $40,047 in Q1 of 2026 from $35,728 in Q1 of 2025, primarily due to higher network difficulty driven by growth in global hash rate. This resulted in an 8% decline in Bitcoin production at our own mining sites compared to the prior year period. Our daily cost per petahash per day improved 3% year-over-year to $27.6 from $28.5 in Q1 of 2025, and over the past 11 quarters has improved by 42%. We believe this remains among the lowest at scale in our sector. In the first quarter of 2026, general and administrative expense, excluding stock-based compensation, was $57.7 million compared to $36.9 million in the prior year period. The increase reflects the scaling of our operations, higher personnel costs associated with headcount growth from the prior year period, and administrative fees in support of our expanded global footprint through acquisition and integration costs. Acquisition and integration costs burdened our G&A by $11 million for the first quarter of 2026. As part of our strategic shift towards AI and critical IT, we have realigned our business operations and reduced workforce by 15%, providing combined annualized savings of $12 million. This was a difficult but strategic decision. In addition, we incurred a restructuring charge of $45.9 million due to elimination of certain business initiatives and realignment. The organization focused on scaling Bitcoin mining is different from the one required to build a digital infrastructure company. This realignment positions the company to pursue AI opportunities, as Fred discussed earlier. Following this restructuring, we expect our quarterly G&A run rate, excluding stock-based compensation and acquisition integration costs, to trend below the Q1 level as these savings are realized over time. Now let me address deleveraging our balance sheet and our recent Bitcoin sales. During the quarter, we retired approximately 33% of our outstanding debt, which included 30% of convertible notes reduction at a discount. This reduced potential future dilution, lowered leverage, and improved our ability to allocate capital toward higher return strategic opportunities. We funded a portion of this debt reduction through Bitcoin monetization. Bitcoin is only a reserve asset. It's not only a reserve asset on our balance sheet, it is also a source of strategic financial flexibility. We will continue to deploy it thoughtfully when doing so creates measurable value for shareholders, and intend to use it selectively to strengthen the balance sheet and fund strategic priorities. During the quarter, we sold approximately $1.5 billion of Bitcoin. These funds were used to repurchase at a discount over $1 billion of face value of our 2030 and 2031 notes and reduced our line of credit by $200 million. In addition, we refinanced $150 million of our line of credit at a 7% interest rate versus 10.5% previously. I also want to highlight that we have not used our at-the-market equity offering program, or ATM, since the end of the third quarter of 2025. We have funded operations and balance sheet actions through Bitcoin monetization, not equity dilution. We think this is an important data point for shareholders as we continue to allocate capital toward the highest return opportunities. Now let me discuss our Bitcoin holdings. We held a total of 35,303 Bitcoin at the end of the quarter, a decrease of 12,228 from the previous year. Of the total, approximately 28% of the holdings were activated as loaned or pledged as collateral. The loaned Bitcoin generated approximately $6.4 million of interest income over the first quarter of 2026. Finally, I want to provide additional clarity on the pro forma capital structure we expect to have in place at Long Ridge upon closing the acquisition. Long Ridge's $400 million term loan is expected to be repaid at closing. We are also currently conducting a consent solicitation to waive the change of control provision in Long Ridge's $600 million secured notes, which would allow the notes to remain in place. The $115 million Can-Am facility is similarly expected to remain in place. As a result, total pro forma debt at Long Ridge is expected to be approximately $900 million, down from $1.1 billion previously, with approximately $185 million of tack-on secured notes expected to be issued. We expect to fund the remaining consideration through a combination of cash on hand, borrowings, collateralized by Bitcoin, and potentially proceeds from the sale of Bitcoin, depending on the market conditions at the time of closing. We have also secured a $785 million of commitment letter backstopped by a bridge loan from Barclays in case needed. We have a plan in place to finance this acquisition, and we are very excited about the Long Ridge, what it will bring to MARA and our stockholders. With that, I will turn it back to Fred.
Thank you, Salman. The actions we've taken so far this year were purposeful and they were interconnected. The Starwood joint venture creates a capital-efficient path to convert our power portfolio into AI infrastructure ownership. Long Ridge adds a differentiated power advantage platform for a premier AI and critical IT campus anchored by our existing Hannibal operations. Exaion gives us a second pathway into AI, sovereign and private cloud, domestically and internationally. Balance sheet actions reduce dilution risk and increase our financial flexibility, and Bitcoin mining remains our foundation. We recognize that the market is focused on demonstrated execution, signed contracts, contracted megawatts, and tangible proof that this strategy converts into shareholder value. MARA is redefining itself as a digital infrastructure company, controlling and monetizing electrons to their best value across multiple compute markets. This transition is already underway. Q1 2026 was a meaningful step forward. With that, I'll turn the call over to the operator to open it up for questions.
Thank you. If you would like to ask a question, press star one on your telephone keypad.
We go
A
live every
confirmation
Thursday.
tone will
and we talk
indicate
about
that
all
your
different
line is in the
companies
question queue.
and things to do. Thanks so
You
much
may
for
press
watching, everybody.
star 2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing
Like
star
we
keys.
all, everything they
Once
said,
again,
we
to ask a
know,
question,
right? Like
press
they said it in the
star
call. They
1
give you a little
on your
bit more
telephone
sort of like
keypad. We'll pause for a moment while we pull for questions.
a little bit of like Adorn did a little bit better. Some of the things
And your
I
first question
liked.
comes from Paul Golding with Macquarie Capital. Please state your question.
Thanks so much for taking the question and congrats on all the progress this quarter. I wanted to ask, as you think high level, and maybe this is for Fred, as you think high level about the approach to expanding on the HPC strategy, on the one hand, you've got multiple tenant prospects across the portfolio of existing sites and through the Starwood JV. And on the other hand, you also did an opportunistic deal to acquire the Long Ridge asset. How should we think about your broader strategy between commercializing existing sites and adding capacity through these opportunistic deals? Was Long Ridge sort of a one-off because of the relationship and it coming to market, or is this potentially a simultaneous approach that we should see unfold between assets coming to market that you would look to acquire versus the existing portfolio? Thanks so much.
Yeah, great question. So, the Long Ridge deal has been in the works for quite a long time, since we acquired the Hannibal asset originally, actually. The site, obviously Long Ridge provides us with the land that we need to be able to build a true premier campus. And the original intention with the Hannibal site was to build a much bigger data center facility. And it just took a long while for the respective parties to reach agreement on a deal here, and they obviously had to take it to market through a process to ensure that they were doing the right thing for their shareholders. But that has been a deal that's been in the works for quite a long time, actually. I think going forward, what you should see is you can think of us as focusing on a combination of small sites, which are perfect tuck-ins. We recently added a smaller site earlier at the end of last year, for example, which is now operational as a mining site, which has the opportunity to potentially convert into a smaller token factory facility if we wanted to do that with that site. At the same time, we're going to continue to look for larger land and power opportunities where we can build significant campuses together with Starwood. We really have the best of both worlds here because The large scale opportunities, having Starwood as a partner does really a wonderful job of de-risking the whole process and ensuring that we're able to execute properly. At the same time, at the smaller scale sites where we know how to develop smaller sites, especially as you start looking in the world of inference, where a lot of this is moving to ASIC technologies away from NVIDIA's traditional GPUs, those facilities now are able to operate more in modular data center formats, which are more akin to what we've been doing all along with Bitcoin mining, where all our sites operate as kind of modular data centers. And so we believe building this duopoly, if you would, of being able to develop smaller sites that specifically service inference needs for a variety of potential tenants or end customers, as well as doing the larger sites with Starwood, is a way that we'll be able to build a beautiful portfolio of assets that will provide long-term value to our shareholders.
It's not a bad
Thanks so much,
answer.
Fred. Maybe just as a quick follow-up, was wondering if I could pull on that inference versus training thread a bit. Are you able to share any detail around the general mix of interest right now from these prospects? Is it indexing more towards the inferencing use cases, or is it more towards training, or equally distributed?
answer that.
Thanks so much.
Sure. So when you generically use the word hyperscaler, you're typically talking about somebody who has large amounts of data that they have collected, that they train a model on, that they then use that model to do things. Amazon, Google, Microsoft use data they have to essentially do inference, train a model and then do inference on that model. So you have a lot of those sites are a combination of training and inference. And if you've been following what Jensen at NVIDIA has been talking about, his belief is that these training sites will over time do more and more inference. I think the models going forward, you're going to see a need for sites where people can deploy models that they have done in-house and run them. And these are these token factory type sites, which I think we're going to see a lot more of, where essentially somebody needs the ability to run a handful of megawatts of model scale. We're starting to see already financial players, meaning non-data center players, wanting to now have data center capacity that they can use for, it could be financial trading, it could be healthcare data, it could be other things, where the ability to develop models and run your business using these models has become mission critical, and therefore you don't want to put it up in the cloud, you want to do it in your own private cloud. And so this is where Exaion marries to this model very attractively. We're able to engage with kind of any tenant across whether they want your traditional large hyperscaler site, which is training and inference together typically, or somebody who just wants proprietary air-gapped capacity for either training and or inference typically together, or just inference and just wants essentially a token factory. They want to run a Qwen model, they want to run an open weight model, and they literally are just looking for kind of this mix of lowest cost per token with best quality of service. And so as an example, if you're a financial trading company, you may do model development at a data center where latency is not important because you're really training a model. But once you deploy that model to actually run it, you're going to run it somewhere on or near prem where latency is next to zero. So that's a quality of service. So you're willing to pay more per token if the quality of service suits exactly your needs. And if quality of service, meaning latency, speed, and connection time, isn't important, then you can run it at a token factory that's more remote. So we believe the market's going to consist of a variety of those tiers, and we're already in talking with enterprise customers, doing part of our market research. What we're finding is, there are companies who their public cloud bills, if you would, their invoices have gone from hundreds of thousands of dollars a month to millions of dollars a month because of the fact they're running models in the public cloud, and they're finding it's just financially not an option. You're also seeing, however, the large model providers needing more and more capacity to run their models. And as they develop more and more tools, and I'll use as an example, Anthropic has just released these new tools for financial analysts, for investment banks. They're doing all of these vertically designed agentic frameworks. These are systems that consume huge amounts of tokens, but they still are running essentially on your data, but it's still, Claude that's running in the background. So there's a need to be able to run across a huge infrastructure of sites globally to be able to operate these things. And so I think you're going to see you're going to see inference growing, but training is still going to be growing for the foreseeable 6-7 years, I think. But you're just going to see inference volumes increase dramatically as more and more agentic technology comes to play. We're seeing 1,000-fold increases in agentic and token consumption when somebody moves from chat to using Cowork or Claude Code, for example. Just talk to any CIO and ask what their token bills are lately, and they'll share with you that token maxing is not something they want to really incentivize people to do.
Really appreciate all that context. Thanks so much.
Yep.
It's a long answer.
Your next question comes from Chris Brendler with Rosenblatt Securities. Please state your question.
Hi, thanks, and good afternoon, folks.
He did say
I
something.
wanted to ask on the G&A line, has seen a pretty significant increase over the last couple quarters, even if you back out stock-based comp and call out on acquisition expenses. And just sort of trying to reconcile that versus the headcount reductions. I know those are probably more forward-looking, but can you talk about a little bit about some of the investments you've made in what areas? And I was struck by your comments about sort of repositioning the organization. As you outsource more and more stuff to Starwood, I would think the organization may not be as large in the future as more and more Bitcoin mining folks are repositioned. Just can you talk about the path of expenses, because it seems like it's a little elevated still in my mind. Thanks.
Salman, you want to do that?
Sure, Chris. Thank you for the question. As you know, we've said this before. We've been growing over the years, and we've as part of our announcement in Q1, we looked at our organization and reorganized ourselves, more focused on what is in the pipeline in the future. And as we discussed in today's call, we've got the Long Ridge acquisition, we've got Starwood, which we're very excited about. What you have to remember is that we are still very good at, what is MARA good at? MARA is extremely good at securing low-cost power at scale, 4 cents per kilowatt hour at 2 gigawatt capacity. That is not many people can claim that they have that amount of power. So we have the operations to manage that from a Bitcoin mining perspective today. And that capacity that we have and the additional capacity that we plan to acquire gets dropped into our joint venture in certain cases, for example, at Starwood, because we maximize our return on that by not having to invest incremental dollars, because we get credit for the assets that we drop into the partnership. So our dilution compared to other miners is much lower. So I'm just going back to the structure, long-winded answer. MARA historically was a pure play Bitcoin miner. We were growing and we had certain technology initiatives. MARA going forward continues to remain technology company that happens to be surrounded by energy in the middle and AI and critical IT, where we expect to monetize and generate free cash flow from a long-term perspective. So we looked at the overall structure and whether what are the skills that we're missing that we need to add to get there, and what are the skills that we don't need for the growth of our previous pure play Bitcoin mining business, and that's what resulted in. Now, in terms of the cost structure for our company size, I would expect, as we have stated in our prepared remarks, to be lower than what we incurred in Q1. But you have to also realize that when we are having these transformative transactions and acquisitions, there are costs associated with those. And as we have disclosed in our adjusted EBITDA disclosures, we will continue to disclose those and isolate those costs so that you can see what are the recurring nature of costs and what are non-recurring nature of those. And that way it helps modeling the cost better.
And then, Chris, the other thing is, obviously the transition takes time in the sense that if I sign a lease tomorrow, that site is still mining Bitcoin for another 18 months maybe while the site's being built. So it's not just we're going to let go of a whole bunch of operations folks just because we're transitioning the strategy. It takes time.
Yep. Okay. My follow-up question was on the funding plan. If a lot of former Bitcoin miners have sort of started shying away from the ATM. You mentioned you haven't used the ATM since September. As you think about your needs, I know you have a lot of cash and Bitcoin on the balance sheet for Long Ridge, but are you striving to be more of an investment grade credit and use more traditional equity funding methods in 2026, or is that more of a longer term plan? Thanks.
Yeah, so a couple of things to think about, Chris. The transactions that we're talking about, and you can look at the examples of what other miners have disclosed with HPC conversions. We expect to, as we've stated previously, we expect to have a few announcements around the tenant in the second half of this year. And usually these transactions are either with an investment grade counterparty or backstopped, as other people have announced. So from a financing perspective, yes, those financings are considered investment grade from a project finance standpoint. Now, when you talk about our profile and our cash flows, our goal and intention is to enter into these, to create this vehicle where we continue to acquire these low cost power sites and drop them into the partnership with limited amount of capital needs depending on the size of the project, and continue to have those triple net lease revenues flowing through our P&L. So that generates, as you get to have more predefined future free cash flows generating through your income, your cash flow statements, then obviously our balance sheet position improves. Our overall, whether you want to call it investment grade or non-investment grade, then you can have a better conversation around what your balance sheet looks like. As you know, historically, this sector has not been evaluated much or paid attention to when it comes to credit rating agencies. But as 2 gigawatt capacity power and so many opportunities to generate free cash flow from a long-term perspective, 15-year risk-free or low-risk rate of return type projects, it certainly begs the attention from a rating perspective.
Okay, thanks so much for the color.
Yeah.
Next question comes from Brett Knoblauch with Cantor Fitzgerald. Please state your question.
Hi, guys. Thanks for taking my question. Fred, on a Long Ridge acquisition, you outlined like a path to get that to maybe like a 600 megawatt AI campus. Could you maybe help put a time frame around that? Like, where are they in terms of that extra 200 megawatt kind of grid connect that they're pursuing now? And then how long would it take maybe to expand the generation, capacity? What approvals would you need?
Sure. So the behind the meter expansion is already in process. So that's on a shorter time frame than the grid expansion. And the grid expansion application, submission process is what it is. But we figure that as you look at the development time frame, a 200 megawatt facility will likely take 18 to 24 months before it comes online. By that time, an additional 200 megawatts behind the meter should be available. And shortly thereafter, we expect the other 200, the remaining 200 megawatts to come online from the grid interconnection. So the key is getting the first site up and running for the tenant, and then just having the power in the queue and ready to go. But the behind the meter additional capacity is what will come on soonest of the two additional capacity increases.
Awesome, helpful. And maybe just as a follow-up, I think you guys kind of reiterated, expect, first lease with Starwood to get signed at some point this year. I guess what's giving you the confidence that this could be executed as quickly as you're expecting?
Competition amongst the prospective tenants to get into the site. There, we have, as I think we said in our prepared remarks, multiple tenants looking across multiple sites that make up 90% of our capacity today. And so, as this market, the demand in this market isn't decreasing. People are getting ever more antsy about getting more capacity. You can just see what some of the model players have been doing just to garner more capacity out there. And, you are, as a model provider, you are directly limited in your ability to grow capacity by the amount of compute you have, because you can only have so many clients hitting your model before your compute runs out of gas. And then the only thing you can do is yield management and raise your prices. And so if you look at what some of the model providers have been doing recently, is they have essentially gone from, that $200 a month all-in thing, guess what? We're gonna have to put a capacity cap on that, and you're gonna have to pay higher fees, because I don't think anybody fully expected the explosion in demand for tokens that has happened once agentic technologies started to be introduced. OpenClaw opened the floodgates for people to start really looking at how to do this. And this is not just an enterprise play, and it's not just a consumer play. There are, across the full spectrum of users, people are starting to build agents. People are starting to use tools like Claude Cowork, for example. You have Google's about to release Remy, I think is the name of their agentic helper, who, if you're in the Google ecosystem, which is a huge part of the SMB market, with Gmail, Google Calendar, et cetera. That's an agent that'll do essentially what Cowork does, but do it in the cloud, whereas Cowork is local machine-based. And so that's just going to drive more and more and more demand. And so, as you add customers, you need to do more inference. And at the same time, your model sizes are growing. Look at what Anthropic has said about Mythos. It's, is it 10 or 100 times more compute it needs than the prior model. And so when you look at that increment in both model size and compute requirement for both training and operating it, plus the inference side of it, there's pretty much just a huge demand for capacity today. And so, we have, as I said, multiple prospective tenants fighting over the opportunity to get into some of the sites. And we're super excited about that. And, we're happy to be in the position we are with the amount of capacity that we have, and with a partner like Starwood, where we're able to take advantage of that.
Awesome. Thanks, Fred. Appreciate it.
Your next question comes from Ben Summers with BTIG. Please state your question.
Hey, good afternoon, and thank you for taking my question. So you mentioned conversations with both hyperscalers and enterprise customers. Curious if there's any preference there from your side. I guess also, if there's any difference in the conversations, then kind of how you think about the customer mix longer term as you build out the HPC business.
Yeah, from a per megawatt basis, the hyperscalers are going to dominate by a large extent, just because of the sheer capacity they need. A single enterprise 25 megawatts would provide a huge amount of capacity for an enterprise customer. So, I think it'll be in the near term 90-10, and over time maybe 60-40. But that really is going to be dependent on how enterprises decide to do things. If they decide to do it on-prem private cloud, then we have the Exaion solution to service that need, and we're able to go in and help them operate that. If they want private cloud in a near-prem or remote solution, we can do that as well. But we think that the hyperscalers are going to be the first sets of tenants that we scale with, and then over time you'll see the enterprise kind of customer mix increase.
Got it. Super helpful. And then, I know you mentioned, scaling the Starwood partnership with new sites. I guess just kind of curious if, since announcing that partnership, if there's been any kind of change in how you're thinking about, developing the power portfolio moving forward, and kind of if their, long tenured expertise in the power markets has kind of helped, potentially scale, what MARA currently has in the power portfolio.
Yeah, I'd say that the beauty in the partnership is that we are really good at building pipeline of sites, acquiring land and power at power at attractive prices, and paying the right price, if you would, for land and power. They are really good at finding tenants, getting sites designed and built and operational, and so it's a perfect complement. There's no real overlap in that regard, and that's what really makes this relationship work as well as it does. So we're just very focused on continuing to fill that funnel of prospective sites, such that we continue to be viewed by the prospective tenants as a reliable source of capacity going forward. And just one other comment I'll make is that a key difference between our model and what most of our peers are doing is they are typically starting with one reasonably sized site, 250 megawatts, 300 megawatts, something like that. And then they have to sink all their attention and capital into getting that site done. And then they go to the second site, and then they go to the third. With the Starwood model, we can just go out and acquire, and then they can do their part of the deal, and we can move at a much faster pace and scale much faster than if we were trying to do this all on our own. And I think that's where, while we may be late to the party, I think we're going to catch up quickly, and I think we're going to scale past what some of our peers are doing because of the value of this partnership.
Super helpful. Thanks for taking my questions.
Thank you. And that's all the time we have for questions today, so I'll hand the floor over to Robert Samuels for closing remarks.
Thanks, operator, and thank you everyone for joining us today. If you do have any questions that were not answered during today's call, please feel free to contact our investor relations team at ir.mara.com. Thanks very much. Enjoy the rest of the day.
Thank you. All parties may disconnect.
That's very interesting. Again, earnings disappoint. I like the fact that they're trying to reduce the debt, and hopefully they're not going to be diluting. Because if we I was trying to show it here as we were talking, it's just been massive dilution for the last 5 years pretty much, which they took advantage of, which makes sense, When your stock price goes up to the extent that we saw during COVID, you got to take advantage of that. Now, they didn't actually manage to sell Bitcoin at the right prices, and they did sell pretty low. And most of the losses that they had were due to the massive drop of Bitcoin. I think I was trying to analyze that too as we were going. What if we go Bitcoin USD? So if we start from the 1st all the way to the 31st, I think it's 24%. Right? That being said, they're already starting to see the migration. And this is the big thing here, which I continue to hear from the energy producers. And it's the fact that how long it takes for you to actually get something up and running. Right now, something interesting that they said was for you to migrate a data center from Bitcoin to AI. By the way, if I got this wrong, put it in the chat because it's also late here. But it takes like they were saying somewhere in the lines of 12 to 18 months or 18 to 24 months, but then, well, no, sorry, 12 to 18 months to potentially get that transitioned, right? So that means that you have to change the hardware inside. You have to make all of these different changes. So this story could actually take longer than the 12 month that I was anticipating. That being said, they are trying to rush due to the fact that the clients that they want are looking to get these deals quickly. The big thing is that if they're having these issues, you're potentially having the same issues with every single hyperscaler and data center play, unless you have some expertise that can sort of come in and take over. But I don't think that's the case, because I'm hearing the same from every single scaler. Like one of the first questions where he took forever to answer, he was talking about like inference and training. And he's saying that, man, he said something insane. He was like 6 to 8 years. So it's like, for example, NVIDIA right now, funny enough, they're expecting the CapEx cycle to end by the end of 28. AMD's having expected to go a little bit further. But this sort of takes all of that away, right? Like if we believe the CEO, we shouldn't have that. Right, so then the AI story could continue at least for the next 6 to 7 years, he said. And then I wonder what we build by then in order to not need more compute here. So yeah, this is interesting because like, well, the partnerships that they have are going to allow them to sort of like, you have the financing side and then you have like the build out phase side, which does work really well. I think one of the comments here was, yeah, like this one here. Like Mara's okay, right? Like Mara's okay at mining, right? And the problem with Bitcoin right now is just that the price, like they always have like dead data centers and all that stuff. So if they can sort of like migrate that away, but if you're able to get somebody, because again, like if we believe the CapEx cycle and the structure that this is gonna play to, right? Like the cycle, how the cycle is gonna play out. We know that energy is gonna become really needed. All of a sudden, it's like if we're talking about, like, let's say we're talking about the average data center goes from 250 to 500 megawatts of I'm so tired of megawatts of power, right? And you're already sort of starting to build those out, and then you can sort of increase the production, and you can have the clients in so they can get used to like building with you, and then all of a sudden you just increase that production, then you can build that out. But then the question is like, is it going to take 12 months or is it going to take 18 months here? Right? Like my expectations for Mara, I don't know, right? Like if this, and again, take this with a kilo of salt, right? Because it's very difficult to say. It's a small company, right, that is currently going through a turnaround story, going from crypto mining all the way to the new sector, like to a new sector, which is AI compute, right? Do I think that they have the expertise to implement this? Sure, right? But do I think that they can execute it to perfection and get it in the next 12 months? In the next couple of months is hard to say. I don't know. Right, but we are seeing the euphoria from the AI build out phase and the CapEx cycle to continue to go into smaller market cap companies. I mean, look at Fluence, look at Mara. Like the thing is I can't how can I say this? I can't but it's true. But or it could go down. The thing is it could go down because you know what I feel like? I feel that, and the thing is, again, I'm not your financial advisor. I have no idea what your risk levels are. So do whatever you are comfortable with. But do understand that this money could be tied up for a while before it shows any value. I mean, look at Fluence, right? Like Fluence had shitty ass earnings. And this is something very similar, right? And this is like directly related to batteries and compute here, right? But like Mara last earnings had awful earnings, but the market got it wrong, right? Like the market was like, oh, we have awful earnings, this company's not going to do anything, and they weren't even losing money. Actually, they did lose money. My bad. They did lose money that quarter. So it was like all of a sudden they massively dropped, and for the whole quarter they were taking a massive beating. But then we saw whenever they got the deal, and then we pumped. I don't think we dropped. We would have dropped today. But we did drop quite drastically today because we actually went up today somewhat, right? So if we go to Mara, right? Like Mara was sitting at what? Like 13.39, so we are down about 7%. Could it go lower more? Yeah, I mean, like the thing is like the problem is you got to take into consideration that there's all of these other different companies that you can invest. And if you are not delivering, you're gonna get punished. I don't think they're getting punished though. I mean, like if they manage to hold 1285, they're retesting that 200-day moving average. We could see them go higher. I don't know. I like the Mara story. I think we saw the lows already. Could we retest them? I'm sure we can. I mean, Mara likes to contradict whatever I say. So again, I am only one data point. So make sure you do your own research and your own analysis and make your own decisions. Because is not my money. I'm putting my own money at risk, but that's my money. That's my risk level. I'm okay with that. By the way, I stream every Thursday with a couple of friends. So feel free to hit the like and subscribe if you want to watch the content, because there was like 50 people watching and I'm kind of excited. But yeah, thank you. I think I muted myself. I hope I did. But I think, yeah, I mean, like the big question here is like we've been diluted massively, but at the same time, market cap hasn't shown up, right? Like if you look, right, is Mara a better company than it was back in the day? And that's a question we gotta ask here, right? It's like during 22, during the crypto euphoria, right? Like COVID, pandemic, all that stuff, right? Mara's market cap reached a lot higher than we are today. We have corrected massively as we had the correction on data centers and the correction on crypto, right? And we are somewhat coming out of that. But again, crypto people are saying that we're gonna see Bitcoin coming lower than expected, so something we have to pay attention to. Correct. And again, we have CPI, which might take away from their financing opportunities in the future. If we don't get an interest rate cuts and all those different things. Again, it's $5 billion company. It's still big, but it's still. Do I think that there are better opportunities in the market? For sure. Do I like the risk reward levels that I see in Mara? 100%. Because if they get this right, then we're talking about a company like CoreWeave was a crypto miner, right? So if we look at like what's CoreWeave's market cap, right? CRWB, right? And they managed to actually get this, but then obviously they had help from NVIDIA and all that stuff, $52 billion, right? So could we see that transition and that growth? We could. We very well could. But is it guaranteed? Nothing's guaranteed in the stock market. And if somebody's guaranteeing you something in the stock market, they're guaranteeing you they're going to take your money and run away. What can I say? It's super late. I'm super tired. I've been awake for more than freaking, I don't know. I've been awake since 8 because I don't sleep anymore. My semiconductor fears haunt me at night. So thanks so much for watching, guys. I really appreciate you. If you have any questions, don't forget to leave a comment. Don't forget to hit that like. And if you want to see us live, we are likely going to be going on Thursday. If you have any questions, I'm more than happy to answer them. We invest with eToro. Make sure to check out the description, even though it's not there right now because I didn't fix it. Check out the description, and you can see my portfolio, what I'm invested in, what I'm doing in my portfolios, all the buys and sells. Again, I think am I losing money on Mara on eToro? I think I am. I think my entry price on, have a look. Because I think my eToro portfolio, yeah, is down. Yeah, I'm 30% down. My average open was 18 on Mara and eToro. Dude, I'm old. It's crazy. It's crazy. You know? If you ask my app how old I am, I'm like double my age. I need to start doing more exercise. I need to get Dimitris to get me to go to the gym. But yeah, it was a fantastic stream. Thank you very, very much, everybody. Rodrigo, Ace, Graham, Dragos, Penny Ether, I'm not even gonna try to say this name. But they did mention Nvidia, but they didn't mention Nvidia in the way that they were supposed to mention Nvidia, which is I find that to be hilarious. But it's like the thing is just like, yeah, you know. Will there be a moment where you can sell the stock and make money? I am sure of it. I am sure of it. But the thing is like right now, I don't know. I like the story. Again, it's also one of the only few companies that gets me this amount of people watching. So, you know, I've asked myself if I'm in love with the name more than I'm in love with the company. But I do think that they, like, if all of a sudden we start seeing, because one of the narratives that keeps me invested in Mara is the fact that there were 2 data centers that were fully built out and they couldn't be plugged into the energy. So the value that Mara has right now is the fact that they're able to just get energy at cheap prices, which is very true. The CFO said that they pay almost nothing. And I think they were paying, like, I think the price for Bitcoin went up. I think it was what, 40K to mine a Bitcoin right now? Was it? Let me have a look. They did say it. Here we go. Yeah, purchased energy cost per Bitcoin. So the cost of mining Bitcoin right now is sitting around 40K. Not bad. You know, so they should be profitable, but again, they do hold a lot of Bitcoin and they started trading a lot. So not trading but holding. The thing is it's always different because it's like one of them has like contracts of energy and data build out infrastructure, and then the other one sells the infrastructure to build out the energy to sell to these people, right? But yeah, Bloom Energy is massive. Man, they probably I can stay here forever. But yeah, I mean, Bloom Energy sitting at $80 billion, so it's like what, almost 40 times bigger? No, that doesn't matter. Take everything I sell with a grain of salt. No worries, man. No worries. I appreciate you guys for watching. This was Drago's idea. I almost didn't stream. It was Drago's idea. He was just like, "Do you want to stream?" And I was like, "I'm more than down to stream." So, Drago. But yeah. Again, take everything I said with a kilo of salt. I'm not a financial advisor. I'm not your financial advisor. I'm a financial advisor. I'm not your financial advisor. I am so tired. I am so tired right now. I have to wake up tomorrow, and then this market does not let me sleep. But yeah, I appreciate you guys. But yeah, Graham, it's just different. It's just different. But then you have like so many things. It's just, yeah. You know who I want to get on the episode? I would love to get my cousin on the episode. Because he works in a solar company and he can explain to me. So is financial advice. Thanks so much for watching, everybody. That's what I leave. Peace out. It's not financial advice. It's not financial advice.